A lot of action in the world of energy and demand for utilities lately. George Tsilis joins us for a look at a very volatile stock on the day. Calumet, George, CLMT, hit a huge level earlier of $25 in the day. Yeah. There's this massive red candle on it, this massive breakout, hit multi-year highs, and gave it all back.
It did, OJ. And I think, there's a lot going on. Actually, if you notice, the Department of Energy seems to be just handing out money left and right. I don't know if it's politically motivated or whatnot, but it's kind of coincidental. But today, Calumet did receive essentially a very, very favorable conditioned loan agreement for about $1.44 billion. And I'll explain a little bit more on that in just a second. But for those who don't know this company, I didn't know about this company until today, but it's essentially a very traditional oil refining company, a petrochemical company. They actually produce high-performance lubricants and solvents and waxes for commercial and industrial application. And it's actually founded back in 1919 and based out of Indiana. That's where their headquarters is. But the operations in mention, in which the Department of Energy secured some very favorable loan conditions for this company, actually are in Montana, where they have their primary refining operations as well as petrochemical operations. They use a lot of the Canadian North crude oil to actually refine. But slowly and surely, over the past few years, they're actually retrofitting their least profitable divisions, the refining division, and they're actually moving it towards renewable aviation fuels. And in fact, the Department of Energy did secure very favorable by like 0.3% above 10-year treasuries, 15-year loan condition for about $1.44 billion to expand operations for these aviation fuels. And this whole project is really called their Montana Renewables Fuel Project. So it's a specialty project. It's aviation fuel, and it's renewable based. In other words, it's got a biofuel component to it. And with that said, they're receiving a lot of DOE and even tax credits for this project. So if you look at the 10-year chart, you'll notice, and today it did rip higher earlier. It actually got pinned around the $25 area. It goes all the way back about 8 or 9 years. And you can kind of see this whole turnaround where for many years, it wasn't a very profitable business. In fact, one of the things I did notice about the market cap, in other words, its share count, it's been very stable for almost a decade at around 80 million shares. So as production for the refiner has actually been down and their solvents and lubricant business hasn't really expanded, they've cut expenses and have been operating very lean for a long time. But it looks like they're getting a lot of promise from this Montana Renewable Fuels Project. And some estimates actually had the loan agreement expected from the DOE or Department of Energy to be around $600 million. So they actually bested that number by almost $800 million. So what that's doing, I think, is it's creating the potential here for the company's EBITDA to grow from around $47 million last year to potentially between $200 and $300 million based upon this favorable loan.
Okay. So, look, energy is a big sector right now, George, and it seems like anything that can, move the spectrum more towards renewables is going to be in favor. We've been talking a lot about the nuclear stuff, too. It seems to me that there is obviously still a lot of demand for this. But as we talked about yesterday, too, there is going to be quite a bit of volatility baked into these trades. And I think today is kind of an example of that because you get a big contract, but then all right, well, then how do you live up to that, and how does it make its way to the bottom line?
Well, that's right. So if you consider this project, which is still under construction or production, they're not expected to produce any fuel from it until 2026, to which time they're expecting to produce about 150 million gallons per annum. Now, going into 2028, it's about 300 million gallons. So they're expecting to double that in the next 4 years, or in other words, from the start of 2026 to 2028. So you got to think about the time. There's a lot of time in between then until they ramp up production fully. But it seems like what we're seeing in this particular instance is that the capital financing conditions are very generous. And so that's creating a positive feedback loop to the equity component of the capital structure of the underlying business. If you look at market cap and equity, it's around $1.8 billion. Sales or revenues are over $4 billion. And the debt on the balance sheet prior to this additional 1.4 billion, it was only about 1.6. So, assuming now the debt is $3 billion, and again, about half of that is in very favorable conditions, just a fraction over 10-year Treasury rates. That's going to essentially alleviate a lot of pressure from equity. And that, like I said, the reason I brought up earlier the 80 million share count, they've been very stable. They haven't used equity financing as they've undergone this transition, and this debt financing is very favorable. So this does alleviate also, lastly, I'll point out this, the cash position on the balance sheet, which was very thin going into this, coincidentally, it was only $7 million. So they were ripe to raise capital, and they happened to do it through the debt financing under favorable DOE conditions. And the other thing I think also about this is, you're seeing a lot of volatility in these names. This is a very thinly traded stock. It's a small cap, or let's call it a mid-level cap company, less than $2 billion. But again, looking at $25 area, it got pinned to that level, which goes all the way back 8 or 9 years. But there's a recovery story here, so I think it's worth watching. But with that said, you got to keep in mind they're not expected to generate revenues from these from this new debt until the project is half complete in 2026.
Got it. Okay. All right. Well, we'll keep our eyes on it. And another one to add to the list here, the energy trades. Thanks, George.